I got a bunch of tweets today because I reposted someone more.
So again, we have a new guest here. So by all means, if you disagree with the statement and the sentiment, by all means, speak up, because we're not here just to agree with one another on everything. Me and Mo have debated on a few different issues from time to time that we don't agree upon. So let's see how this one goes.
So I'll pull up the initial tweet that showed up on my newsfeed. I don't follow him, and I have nothing against him. I just saw it, and and I see a lot of this stuff. This particular individual said the same thing in March and then in February, and now we're here. So basically, they're saying, why do most new investors say that I'll wait till it goes lower before I buy? Why not average in? These are the greatest public companies in America, right? So these are very common blanket statements that to someone who doesn't know, they will think this is an immediate buy. But this was what my response was. And Zay and Mark, like literally unfiltered, you guys don't agree with it, just like be honest, because I want to know the different side to it, because I can't understand why anyone would. So the reason why you don't average in, because while no one can tell you what the bottom is, you can clearly see that Apple is in clear downtrend. Additionally, we have massive put flow leading all the way to 130 for October 21 puts. This is why you don't blindly add in. So I don't understand. And if this was someone who's opening a new position because they want to get a starter entry, that's fine. But like I said, there's some people, and what they do is they've been retweeting the same thing every month, saying buy the dip, buy the dip. But we're at this point where Apple's at 150. While SPX is the new low of the year. In June, when SPX was at, I think, 36, Apple was 128, which is telling you all the money is now parked in Apple. And if anyone studied recession, the most liquid stocks are the last one to roll. Meaning, if this goes, you're going to take the biggest hit that you've ever taken, and you're going to be like, what? Why is Apple down 30%? And you put in a big sum. So let me know, like, even in the comment section, if anyone's got like disagrees with me, because I really truly want to understand how it's okay to tell people to buy something when we're clearly downtrend. I'm not saying I know where the bottom is and I'll let you know. I'll send you a message. We know, no one knows. Tomorrow Fed goes, you know what? We fucked up. Let's do QE. I will start buying with you. But way the things are, I don't think I'd touch it. But I'll let Mark say, if you have any comments, I'm open to hear.
You cool if I go first, Zay?
Yeah, go ahead, brother.
Yeah, so I'll touch on that. So it's funny because I actually texted Zay. We DM'd, I think it was Friday. I told you I sold all my Apple shares, right? So yeah. I sold all my Apple shares, and I was gonna do a video on it, but I was like, you know what? I don't want that smoke right now. I want a peaceful weekend. No, you're absolutely right, Mo, when it comes to certain stocks, and I noticed that myself as well. Like I noticed that the SPX was going down significantly, but Apple wasn't. Apple was not at 129, which means we still have quite a ways to most likely to drop. And what I've been doing recently, I've never taken an L on Apple, luckily. I typically always buy around 130, and then I never really sell at the top. I probably should. I'm trying to like hold it for long-term investment purposes, but usually when it gets to 150 and it breaks it, I'm just like, I'm out. I'm gonna wait until it goes back and retraces to 130. That being said, the danger with some of those messages that are putting out by some of these social media personalities is they don't put it in context, right? They've been saying buying a dip for over a year now, since we've been on a downtrend, since the market's been literally collapsing. They've been saying buy the dip, buy the dip, buy the dip. And it's not buying a dip, it's buying the downtrend. And had you listened a year ago, you would be pretty pissed at this point because you're probably down 30 to 80, 90%, depending on what stocks you bought. Obviously, Apple, Microsoft, Tesla, Amazon, Google, those are all, good companies, but still they're down significantly. And even when it was at the all-time high, these people were saying buy the dip. Anytime a dip like 4% or 5%, oh, this is a good time to buy. And I think people need to focus more and just understand the difference between going all in and nibbling. Now, I just did a video on my channel where I literally said yesterday, is like, I think this is not a time where I think it's time to start nibbling. And I've been nibbling. Once we drop below 3,800, I started nibble, which means I would just buy like 2 shares here, 3 shares here, maybe 5 shares, 10 shares here. But I wouldn't go in and put all my money in. And I looked at some of those comments and people were like, man, I wish I had money right now. I just want to dump everything in. And this is not necessarily time. You need to be a little bit more clear with your message. This would, if anything, we're in bearish territory now, officially, right? We're in a bear market. This is the time to nibble I think, if you have the money. Once again, we've already had other guests on the show who explain that your situation needs to be set first before you actually start, dumping your money into the stock market, because we probably do have quite a ways to still go. I can't call the bottom. No one should be able to call the bottom. Even Goldman Sachs can't call the bottom. But this to me, I have extra money. I've been stacking cash. I've been having cash on the sidelines, just waiting for this moment, and I'm nibbling. And I'm still just nibbling. I'm not putting thousands of dollars in. I'm slowly scaling in. And I think that's where they fail to sometimes inform people, just saying, like, this is the time to buy. No, just be careful with your words, because your words can lead retail investors down the wrong path, because we all know that a lot of these larger groups have a cult-like personality. They follow every single word that you say. And if you don't have that accountability, and you don't have accountability, there's usually no accountability, because again, it's entertainment purposes only, right? Even on my channel, it's entertainment purposes only. So you have to be very careful with your message. So on to you, Zay.
I'm gonna piggyback on a lot of the things you guys said, but just some very important things that I just want to highlight. And you kind of hit it on the head, Mark, is context matters, right? So I think everybody's journey is different, which is why I'm all about strategies, right? Say wealth strategists. Now, I'm also glad that we're having a fire conversation today, because the whole like buy the dip, all that kind of stuff, context matters, because in the fire community, and this is going to be a dope little segue because I'm going to tie this in, bro. They don't care. They're just going to do, to your point, Mo, they're going to dollar cost average. They're going to buy every single month. They don't care what the market is doing. And that's just their plan. So if somebody has that strategy or that mindset, then buy the dip. That's what they do. They just continue to buy. They don't care, because their goal isn't about the best price. Their goal is accumulation and getting a certain amount of capital allocation into a stock. And when they get that goal, they'll figure out what their average cost basis is at that point in time. Now, if you are a trader, then buying the dip, that should not be in your vocabulary, right? So I think when people give that blanket advice, context matters. Are you talking to investors or are you talking to traders? Because it matters, right? An investor, I would tell, if anybody is an investor and has a long-term horizon, to both y'all point, we cannot predict the bottom. So this is a great time to nibble. So if somebody say, yo, I got a 10, 15 year horizon, I would tell you to buy right now, because I can't predict the bottom. You're basically getting the market at a 20 some odd % discount. The same thing I tell other people. If you went to the store and you could get the best Jordans for 25% off, you will probably buy them. But if it comes next week and they 40% off, would you be pissed? Maybe, but you still got them for 25% off. Like, it's just a little arbitrage. So I think I agree with y'all statements that context matters. You have to be very careful with your choice of words, and that ultimately, look, in this financial game, there's millions of ways to skin the cat. So I'm very reluctant to be like, oh, that person's wrong for saying this, because the right person in the right context, it is actually the right thing to do. So yeah, we just got to be careful and just tell people, look, assess your situation to make sure the advice you listening to makes sense.
Yeah, no, I definitely agree. And so when it comes to, like, for example, me, when it comes to dollar cost averaging, when it comes to my indexes that I have, yeah, I'll do that every month, and no matter what the price is. When it comes to individual stocks, I'm a little bit more careful. But again, I mean, I'm going to show my portfolio here soon on my YouTube channel. I mean, everything's red. I don't have a single thing that's green in there. So, I mean, and I just started like 2 years ago, because we're at a space now, especially with individual stocks, that if you started investing 2 years ago, majority of them are back or below, or below. So, and I think that's where also a lot of the anger comes from some of the retail investors who follow groups and stuff like that. I get it, because unfortunately, everyone's just like, buy these prices. But a lot of people haven't really felt the pain of how a negative portfolio looks, because it was bad timing, man. 2020, everything went up. It looked amazing. And now we're back to reality.